News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Jess and David.
Nancy, thank you very much. David Gura here with Jess Menton, filling in for Carol Masser and Tim Stenivek on Bloomberg Business Week. And I should say, it sounds like that courthouse in Lower Manhattan extremely busy with that verdict due any day now in the Bob Menendez case and also the Bill Hwang case. So we'll be monitoring that very closely here at Bloomberg. And Jess, one of the joys of filling in on this show with you is that I get to draw from your reporting. You have a piece out today on the Bloomberg about JP Morgan's trading desk, Andrew Tyler at that desk, issuing a warning. We talked a bit earlier in the show about the inflation data that we're going to get later this week. He making a, dare I say, forecast or prediction about what might happen as a result of that. Walk us through what you found in his note most interesting.
So Andrew Tyler, he's specifically on the trading desk at, as you mentioned, JP Morgan. So each month they put out different scenario analysis where they potentially see the probabilities of where CPI could come in. Obviously, we know PC is the Fed's preferred gauge for inflation, but nonetheless, if you're looking specifically at what the options market is pricing in for Thursday, so that data will come out at 8:30 a.m. Washington time. So he's seeing the S&P 500 pricing in about a 0.9% move in either direction that day. It would be the biggest actually since last month's CPI report, because that was one of those dual where we saw CPI and the Fed rate decision actually fall on the same day on June 12th. But it's also in line with the last three CPI prints. So you still see that elevated. And to put into context, the S&P 500, when it comes with a move of either direction, last time it saw a swing above 1% was actually in early June. And then the last time it declined more than 1% was actually in late April. So actually relatively over the last month, even though it seems like we may have had a few big days here and there, we haven't seen big gyrations overall. But still, nonetheless, if you're looking at what core CPI is supposed to come in, about 0.2%. Obviously, we know super core, especially stock traders, watch that very closely, especially the month-over-month numbers. So we'll keep a close eye on that. And you know, David, of course, Fed Chair Jerome Powell and other Fed officials always like to look at super core because it strips out, obviously, what's going on with housing, and then they can get more of a better read of what's happening with wages and inflation.
All of this happening at a time, as you point out in that piece, when volatility is pretty subdued, quiescent, as I think Tom Keene would say. The VIX at about 12.5. This is Bloomberg Business Week. David Gura, Jess Matt.